We're looking potentially at around 500 basis points of rate hikes from global central banks this week. Let's start with the here and now then. How do you expect global equities to react to that kind of tightening?
Well, I think that the markets are now pricing a significant tightening, as we've just been hearing. But we need to sort of put this in some perspective. It was only a little over a year ago that the markets was pricing only one, maybe two rate rises this entire year in the US. So we've traveled a long way. And over the course of that, actually, stocks haven't fallen that far yet. And financial conditions probably have got further to tighten. So I think that the risk is that as we get those greater rate rises actually delivered, the market moves to price even further rate rises over coming months, even if we don't eventually get there. So I think the key is really where the markets eventually get to pricing both rates and growth. And the mix here is probably still negative for equities, at least in the short term.
OK, and that journey then that it continues as equities readjust to that. And in terms of valuations, Peter, you've been quite clear on this in prior conversations, saying that valuations still need to come lower as that adjustment happens. Do you hold that view then still?
Yes, I think that as you approach a trough in a bear market, and this is a bear market, what we would call a cyclical one, it's really about triggers of rising inflation and rates resulting in concerns of recession. To get to a trough, cheaper, attractive valuations are certainly one of the conditions you nearly always see. It's not the only one. Certainly, equities do start to recover during recessions when data is weak, but a slowing in that pace of weakness is usually pretty crucial, as is reaching a peak in interest rate and inflation expectations. We're in that adjustment, but valuations still, I think, have further to go. The US is still trading at a higher multiple than we've seen over the course of the long run and even over the last decade. So I think there's still vulnerability there on the valuation side before we get a trough.